Hello, everyone, and welcome to today's webinar all about bridge loans and how you can use bridge loans to win in a hot purchase market. Now, as the webinar happens, we want to hear from you. We want to make this as interactive for you and engaging as possible. So, as we're speaking, if you have any questions or you have any comments or you want to chime in anywhere, just go ahead and use the little questions tool and we will address your comments as they occur to you. So with that, I would like to introduce today's speakers. Oops, today's speakers. Let's start with Janice, since Jim stepped away for a second. Janice,
Hello.
how about you introduce yourself and say hello?
I'm Janice. Hi, everybody. I'm an account executive at LendSure, and I'm happy to be here to talk about bridge loans.
Awesome. Jim, how about you say hello?
Hello, Jim Voisard, Regional Sales Manager with LendSure for 6 years.
Awesome. Bruce?
Hey, good morning, everybody. My name is Bruce Mayhews. I'm the operations manager here for LendSure Mortgage Corp. And happy to have you all on board and look forward to some great questions.
Awesome. Janice, why don't you let us know what we're doing today?
Sure thing. Right. Today's agenda, hopefully we'll be having fun and be a little informative as well for you. We'll be going over our bridge loan program, how it works, real world loan scenarios. I'll be covering that part. Bruce will be covering credit requirements, income requirements, and loan terms. And well, Jim, our expert, he's going to tell you all about how it works. And as well as we'll touch upon other programs that we do at LendSure that aren't the bridge loan. And Rose will be going over our private label resources. And of course, please feel free to ask questions. We love to answer any doubts or things that come up during the webinar. Before we start on all that, I'll let you know a little bit about LendSure. We are licensed in 42 states and growing. We were founded in 2015 and headquartered in San Diego, California. We also have centers in Rhode Island, Georgia, Utah, and Missouri. And we do have a highly experienced management team, so we look forward to serving you. Would you like to know what we do? I'd like to share that with you. We do Alt A is what I like to kind of call it. Our mid FICOs around 700, LTVs around 70. We don't do very low scores, FHA, VA, second home mortgages, HELOCs, that kind of thing, Fannie, Freddie, not us. We do specialize in bank statement loans, asset depletion, and asset qualifier loans. We have a great DSCR program, debt service coverage ratio for investors. That means no income, just qualify based on rents. And we're like Alt A, I guess, 8 paper loans that just don't quite fit conforming. And that's a little bit of LendSure in a nutshell.
Hey, Janice, I want to add one thing on what we do. LendSure is a wholesale-based lending operation that has no retail presence. We're specifically geared for the non-QM business. So we're never your competitor on the street. Your business is your business, and we're just there to back you on the non-QM side of the business. So the next slide says, what is a bridge loan? When I see that word, I go to, what is it and who is it for? Who's a bridge loan for? What is it really? In simple terms, a bridge loan is for a move up or move down buyer that seeks a new property that needs to trade his equity for cash. I'll say that again. The buyer that wants to buy the new home because they're excited about a new house needs to trade their equity for cash because the seller is not going to take a contingent offer. That's my definition of a bridge loan. It's a single payment 1-year note on a departing property so that the buyers can get their equity out. If it has an existing mortgage on the house, we retire that debt as well, give them their equity out so they can write an offer that gets them in the ball game on a new house. Now, in your real estate markets across the country, there's hot markets. There's really hot markets. I'm not sure there's any cool markets. We do know that sellers are finicky today. They're demanding. They have multiple offers in many cases. So your buyer has to be in a ready-to-go position. So our bridge designed to get them ready to go, cash in hand, we can close, no contingency. So that's what the bridge does, and they have a year to pay that debt back.
Okay. So David just wants clarification that a single payment means that there are no monthly payments on the bridge loan. Is that correct?
For
That is
12
right.
months, there's no payments. The interest accrues, there's no payment, and also we don't think about a payment in terms of when Bruce speaks, he'll speak to the debt ratio tolerances. We don't think about a payment on this house. It's not in the DTI. We're qualifying the new home only. All we're trying to do is get them in a strong position so their offer is considered in this, as you guys know, crazy hot market.
Okay.
The other beauty on that per piece is if they have an existing mortgage and then we're making that payment on time, there's no more payment there either. We've retired that debt. So their only focus is the payment on that new house.
Okay. So let's talk a little bit about how a bridge loan can help in a hot market.
Well, it gets you in a qualified status. That's the biggest thing. The other thing is today, a lot of people, because of inventory issues around the country and particularly these hot markets, they want to move, but they can't find a house. When they finally find one, and they finally get to that point where somebody says, "Honey, stop the car. Let's go look at this house. It's been my dream home idea for months." They can now go make an offer on it with confidence because they've got a house that they want, so they're willing to list their property now to get their equity out. So that's a big boost. It's tough to just to go list your house, and I don't know what I'm going to buy. That's very scary. So this program eliminates that fear.
Well,
Okay.
and Jim, I'd like to kind of say one thing I've heard a lot from people is it really helps borrowers when if they have to sell their house and then they go buy one, where do they put all their stuff? They have to move, they have to do a lot of, it's costly, maybe put their items in storage. So this permits them to be able to move into the purchased home without having sold the primary. So that's logistically just very convenient for a lot of people.
Right, avoids the double relocation.
Yeah.
Paul wants to know if there's a prepay on the bridge loan, if he wants to pay it off in a month, 2 months.
Nope.
We want that loan paid off as soon as possible. So there's no prepay. And the buyer, or the borrower, I should say in this case, there is an interest rate. It's accruing. The sooner the home sells, the less interest they'll pay. So they're motivated. One thing we got to point out for sure is the departing property must be listed before we can write the loan. If it's not listed, we can't write the loan. Our only payback, if you think about it, we're not getting payments. Our only payback is this house sells.
Okay. So Kelly wants to know, so the bridge pays off the current mortgage and goes into first lien position on the old property?
Correct.
Go ahead, Bruce.
All right, great.
Exactly. So the house they're living in right now is their departure residence. Needs to be listed for sale, as Jim had mentioned. Our lien comes in, pays off any existing liens on that house, and then gives them the cash out that they're requesting on top of that. That cash out, therefore, goes into their house that they're finding to buy as their down payment. And again, it's a 1-year note. It's a balloon note, all accruing at one time, no payments.
Okay. And Chip wants to know, so LendSure is doing both the bridge loan and the new purchase loan, or can LendSure do only the bridge and will Fannie and Freddie allow for the 1-year note?
No, that's a great question, but no, we do require to do both loans. We don't do the interim financing by itself, the bridge just by itself. So the loans, we will flag them to be funding concurrent, even though the departure goes a few days earlier because it will have the right of rescission on it, being it's still owner occupied. But we do have to have both loans. We can't just do the bridge.
Okay. And Kelly's asking that whether the departing property must be listed for sale, and I think you agree,
Yes.
you already addressed that yes, it must be listed for sale.
That's
Okay.
correct.
One other point on a possible small benefit: the 1-year note. We give folks a year. Other competitors do 6 months, where they require monthly payments. The beauty of LendSure is you get a year, no payments. If people want to make some minor improvements to maximize their offer, they want to do some painting, fix the front door of the house, give it that curb appeal. They have a little time to do that. so they can maximize a little more equity out. They don't have to sell the house on day one. So that 1 year gives you a little bit of flex.
Okay. Are you guys done with this slide?
Yeah, I'm done with that one.
All right. Janice, let's talk some scenarios.
Absolutely. These 3 scenarios I'm going to go over are all scenarios that I successfully funded at LendSure within this, actually just a few months. This first one, a great little scenario. It was a retired couple. They were moving from one part of California to another, and they had some money to put in, but they needed some more to tap into their equity. They owned their home free and clear. It was worth about $500,000, and we did our max LTV on this 75%, and got $375 out. And so they owned it free and clear. So really, we were able to use the proceeds from that cash out for the permanent financing. But it was their goal to have a very small loan amount. It's not very typical on these bridge loans, but it can happen. We were only at 24.6 LTV on the purchase. They wanted, they were used to not having payments. They owned their house free and clear, so they wanted a small mortgage, and they were able to do that with bringing some cash in as well. And they closed, perfectly. Realtors were very happy, and it was a great little transaction. So this was kind of a retired couple moving into, I believe it was kind of one of these more retirement type places. So it was a great loan. The next one I'm excited to tell you about too. So Rose, please. Okay, so this one, I don't know if you heard Jim say, honey, pull over the car. This loan, it really was the epitome of somebody who was in love with a house for a long time, but it wasn't for sale. And it was on the same street. So we had 2 very similar addresses. It was a little confusing at times, but they saw that the house that they were in love with for years on the same street they lived on had gone for sale, and they just had to have it. I have to have that house. Well, what's one way to be able to get your offer accepted is to not be contingent on a sale. They didn't have time to scramble and sell that, their owner-occupied property right away to be able to buy their dream home. So I got a call. It was urgent. I need to close this in 3 weeks. I need to be competitive. I need to do this. Boom, boom, boom. Loan officer was really on it, and so was the realtor. Everybody was, all the ducks lined up in a row, so we're able to close fast. And we did, their existing property was worth 1.3 million. We went to 75 LTV again, our max, and did 975,000. It was a loan. I know they had an existing lien, so we paid that off, and then we were able to go on our max from a permanent financing perspective. That our max is 80 LTV, and we got them their house. I mean, their offer was accepted. Everybody was very happy. It really is that situation where somebody's in love with a house and they just got to have it. So you'll be the hero that can provide that financing for them.
Were you happy, Janice?
I was ecstatic.
Okay.
It was a great opportunity to help a loan officer. That it was a great loan. So.
Janice, Greg wants to know how the home value is determined for the departing residents.
Great question. So on all our loans, we do require an appraisal. So we will go off of appraised value. So at the beginning, we will look at, Zillow and Redfin and try and come up with a realistic value for pre-approval. But ultimately, it will be up to the appraisal.
And Chip wants to know, is there a prepay penalty on the new purchase loan?
That's a very good question, and I do get asked that a lot. On occupied properties, there is no prepayment penalty. However, as the broker and loan officer, you do know there could be EPO. So we do ask that you keep them there for 9 to 10 payments and really help us, and then they can refinance. But you would be surprised, our rates for owner-occupied full doc with good FICOs, they can be in the 3s. So, they might be happy with the rate they get.
Okay, great.
All right, this one was a very unique one. It was an investment property bridge loan, and it was actually part of a reverse 1031 exchange. We did
Did you say non-owner, Janet? Did you say non-owner?
Yep, this was a borrower selling an investment property to purchase another investment property, except he found the house he liked and loved first before selling the investment property. So what we did is it was 60 LTV, And you'll notice it says 61.2. I can go over a little bit about how that works. We do finance points into the loan, and we go above our LTV. The only time that we can't finance the points is if we're at 75 LTV. Then they would have to come out of pocket for a buy down.
Points for what, Janice?
Points for many things. So compensation, right? You got to get paid. And on the bridge loan, there is a 1.5 that it costs to LendSure on everyone. If you think about it, there is no prepayment penalty. We're getting paid off usually within a month or less. So we do charge a 1.5 on the bridge.
Yeah, Luz had a question about how much is the cost, and I think what you just said addresses that. Is that correct?
It should. So there is an underwriting fee. If it's a 24 months bank statement, you'd be at $15.95 underwriting fee, or a full doc, it's $12.95. On the bridge, there is a 1.5 points to LendSure. And on the permanent financing for the, for the purchase, there is no points to LendSure unless there's an exception or you are wanting to do a buy down. So that's case by case and up to your borrower.
Okay.
Oh, and then, just to go briefly over this one, it was, like I said, part of a reverse 1031 exchange. So that means they wanted to get the tax benefits, but they hadn't sold the house. We were able to do it. It was a unique one, like I said, not a very common, scenario, but it worked. And the investor was very happy. He was able to purchase a really nice home in Utah to grow his portfolio.
All right. Janice, Shannon says, so there are 2 loans that are being paid on. Can you clarify that they're about the monthly payments on the bridge financing?
Yes, I can clarify that. So on the first loan, which would be the departing home or the home that is being sold, the bridge loan, there are no monthly payments for a full year or until the home is sold. So, yay, I know, it's amazing, right? So they don't have to worry about it. There's no more payments on the departing home. And that also helps because it will not go in the debt to income calculation. And that is something that really separates LendSure from its competitors. Lastly, on the purchase, there is a monthly payment, a normal mortgage, just like any purchase.
PITI.
Yep. Hopefully that answered your question.
Awesome. And Bruce, why don't you take this one? What's our time frame from application to closing on a bridge loan?
It really depends on how complete the package comes in and how the complexity of it. But realistically, they can get done, I would say, within 30 to 40 days. It sounds like a long time. I know Jim and Janice are probably throwing little darts at me on that. But, just from the standpoint, how complete the package comes in initially. As Janice mentioned, Jim mentioned, we're in the non-QM business, so sometimes there's a little bit more complexity in how people are documenting the ability to repay, especially on the permanent financing. But they usually happen pretty quickly. It's as quickly as the broker wants to roll with us. We're here to do it. So I think the earliest we can do it is probably 12 days, but I don't want to commit to 12 days on something like that.
Well, let's bear in mind in today's reality, appraisals and appraisers across America in certain markets, they're hard to get done quickly. They're busy people. They want big fees. So if the appraisal's in hand, Bruce is correct, we can get it done, 30 days or less. But that appraisal piece is beyond his control.
Right.
Right. And I mean, just so you know, not to brag about Bruce or anything, but I submitted 2 bridge loan, full packages yesterday and got a pre-approval by end of day. Not always typical, but when things are clean and well submitted, we are relatively very fast. I would say aggressively 3 weeks is realistic when all your ducks in a row, because I know we've done it. But like, again, case by case appraisals, they matter. Their turn times sometimes aren't as fast as we would want them to, but yeah, that's my take.
A lot of the stars have to align. And like Janice mentioned, I was happy to get through those. So that's 4 loans for Janice right there, if they all close. It's a sweetheart loan program, is what I term it as, because we don't really have very much competition in this space, especially when we're not including that bridge payment in any debt ratio calculation, as you know, because a lot of lenders do. But when you eliminate a nice chunk of payment, it makes it that much more easier to qualify on the ATR.
Okay. And Janice, regarding the stacking that you mentioned, is that both, Kelly wants to know if that's both uh, lender paid comp and broker paid comp?
Yes, great question, Kelly. So the way we work is we do not add to the rate to pay. What we do is we finance the points on top of the loan amount. It can be disclosed as lender paid if we have an LPC agreement with your company, or it can just go as broker paid compensation, and the way it's disclosed is as your compensation. So.
Okay.
Hey, Janice, financing those points is that concept of using your equity is smarter than using your capital. The cost of equity is less than the cost of capital. So we're one of the few lenders that will give you, the borrower, the money to pay the broker and or buy his rate down.
That's right.
Awesome.
And one more benefit, missed out on one of the slides. For the loan officer that's on the call, I know you guys are on here for a reason. You're looking for a business, you're looking for more money, you're looking for opportunity. This program is unique, and it's a great lead-in with realtors. It's tough, I know, because I was a realtor for 6 years, to break in to the real estate market and gain their confidence so they refer you loans. Here's a product that can get you indoors that maybe you could not have gotten into before. While you're there, start trying to build that relationship, build rapport with that realtor. You can mention your go-to programs as well. But this is the lead bird that could get you in the door if you use it to your advantage, because your banks in town don't do this. You have this.
Okay, great. And Bruce, why don't you take us through some of the guidelines for this?
Sure. So just again, I think I really enjoy this product because, again, no payments. That's the biggest thing. But so as far as the guidelines go, 680 minimum credit score, no major credit events in the last 4 years. That'd be foreclosures, bankruptcies, triple A or double A mortgage history. Sometimes I say triple A mortgage history in the last 4 years. That's payday A. 5 minimum trade lines, with 2 of them being active. Again, that's fairly common and fairly standard in the industry. So no shockers there. We've got the DTI calculations being based on the primary residence that you're buying. You can change the slide there, Rose, if you want. And it will go into the, based on the PITI, right? And then any HOA, things of that nature. Again, the bridge loan doesn't affect the DTI at all. And to me, that's the biggest thing. Full doc, bank statement deals, acceptable documentation for both loans. So full docs, your W-2s, your pay stubs, bank statements, 12 months, 24 months. For business bank statements on that. Pricing adjustments based on super prime Alt-A guidelines. Partial property is not to be rented, nor will it accept any rental income associated with that property that's on the departure when we calculate the DTI. Again, the intent is to have that home sold within the year. And as Jim mentioned earlier, generally speaking, we have these homes sell within a month to 2 months. I think one of the quickest ones that we saw sell was within a week.
Yeah.
So we closed the loan. But if you think about it, the buyers are borrowers when they're buying a new home. It's an insurance policy to them to have the bridge loan and get the equity now in case their departure fell out of escrow. So they may say, well, that's pretty expensive, but if you get in there and you say, hey, I have to have this home, or Janice mentioned the one where it was just a few houses down and they've been waiting for something on their block. They moved from a corner lot to an interior lot was where they wanted to be, and it was a bigger home, but they've always wanted it. When they did theirs, it's an insurance policy is the way I look at it, to get that equity out now, make sure they secure their dream home, if you will. And then if that home did, if it fell out of escrow, they've got the money there. They don't lose their dream home. But if it pays off, oh well, it's the cost of doing business. And most people don't even blink at that when they want their dream home. Max DTI on this is 50%. Again, fairly common in the industry to get those out to DTIs that high. We don't do rural properties, and it gets into sometimes well, what's rural, what's not rural. We'll look at the appraisals and make that determination, but you pretty much know if it's rural or not by rural characteristics of the property. So again, departure property must be listed in the MLS, open market transactions, and we want to see that listing agreement before we even get to the docs. I can
Hey,
always
Bruce,
condition. Yeah.
sorry to cut you off, but let's share with them our funny definition. I think it came from you of this is a funny, it's not in the book. It's a funny definition of what is rural. And one day I think Bruce said, if there's not a Starbucks within 35 miles, we may have to call that rural.
Right. Well, again, it gets a little ambiguous as to what's rural or not. And again, we rely heavily on the appraisal, but we also look at characteristics of the communities. So if you're on septic, on wells, if you're trying to go off the grid, and you're doing just strictly solar, not solar attached to the grid, but just solar by itself, you're probably rural on that. In those when you get into heavy acreage, 30 acres, 40 acres, 20 acres, 50 acres, you're probably a little rural on that. Those aren't the ones that we're looking for. Not to say we won't consider something. They do have to be on the grid, public utilities, but we would definitely want to hedge LTVs in those scenarios. So it's not to say we can't. If you have something in doubt or you're kind of questioning yourself, send it to Janice. We'll take a peek at it and let you know right out the gate. So, because we don't want to lose any opportunity either. Max LTVs on the primary residence, 75%, investors, non-owners, 65%. You saw, Janice, we did the one at 80% as an exception. We just look at it and see, does this really make sense? So we are an exception-based, what I would call an exception-based company, where the majority of our, not only are we non-QM, but we do a lot of exceptions within our own business.
This slide, Bruce, sorry to cut you off. This slide, 75 pertains to bridge loan.
Right.
Hey, Rose, go to the next slide. I think on the new one we'll go to 80, right?
Gotcha. On the new one, it's at 80, and then it was stacked, I think, to 82, I think, or 81, some change. I'm not sure on the primary, not the departure. So on the new property, LTV is determined based on super prime Alt-A guidelines. They'll never exceed 80%. Higher loan amounts will be affected based on reductions in LTV described in the super prime guidelines. Non-owner occupied is approved by senior management only. A lot of those we can get, you get them approved through the pre-qual process, and we're going to stick to our pre-qual. So again, you eliminate that fear of, oh, are they going to do this or not? Send us in the pre-qual. And thanks for pointing that out, Jim, on the 80% piece. I did misread that.
Well, Bruce, that pre-qual is valuable too, because it gets you an answer pretty quick in the process. You can talk to your realtors, the listing agent, and say, I have this in my hand. It's basically a go shopping letter. You have it. And I want to tell you, Bruce's pre-quals, they're the best in the country. They stick.
Hey, Bruce. Oh, sorry.
Yeah, no, go ahead.
I've got a couple of different people asking, a few people actually asking, what's the rate on for the bridge loan?
6.999 and 1.5 points to LendSure.
Okay.
Cool. So sell the house, right?
Just one fixed rate for 1 year.
IO.
With all the IO, and it's one balloon payment. Last bullet point there, lien position, first liens only. So we won't go in a junior position. We will pay any lien that's on title off on that departure residence. So we are in first position.
Okay. And then just, can you clarify again? So Rick wants to know, so can the purchased property be rural?
Well, we'll look at it again. Typically rural is not where we want to go. But again, if we do decide to go rural, we do hedge back on the LTVs considerably. We're not looking at 80%. I mean, you're looking, considerably less. Go ahead, Janice.
Oh, what I like to do is when I get asked about a property, can we do this? I just say, send me the address. And then I do take it to Bruce. He sometimes goes with the head underwriter and they discuss it and say, maybe they will lean forward and do it, but it'll be like Bruce said, at a lower loan to value. So when in doubt, send it to your account executive and then find out, right? Then you get a quick yes or no instead of, wondering and putting it through a lot of different, like trying to pre-qual it and having it bounce back. Just send the address.
Okay. Jim, why don't you talk us through the program?
Well, we're going to reiterate it. We didn't talk about loan amounts. That's on there. You can read the loan amount. The big thing to remember, this is a trade of equity for cash. They get in position to buy. It's a 1-year not renewable note. So ask your agent to please list the house at the right price. A property properly listed is half sold on day one. When LendSure does these loans, we're not second mortgages, we're first mortgage on both the bridge and the permanent.
Okay, great.
All right, I guess I'll go over a little bit. This is completely separate from bridge loans, and I don't want to confuse anybody. These are other programs that we do at LendSure. Bridge loans are amazing, and when they come along, we love to receive them. However, we also have other types of loans, like for national, we do cash out up to $1 million. We do non-warrantable condos, condo tells, those are condo hotels, 2 to 4 unit properties, second homes, 24-month bank statement, 12-month bank statement, and yes, sometimes even 2-month bank statement programs for self-employed borrowers. We do have a program for construction takeout loans, the fix and flip program. That's brand new. Asset depletion and asset qualifier can be used as sole source or supplemental source of income. Basically, that's if somebody has $1 million, we can divide it by 120 or by 60, depending on the scenario, and that will be their income. So if they're asset rich and income poor, let us know, we can help. We have a great interest only program. It's a 10-year interest only that rolls into a 30-year fixed. So it's really a 40-year term. We can do that with almost any of our programs. So if your borrower is interested in having interest only, let us know. We do have a lease option and land contract loans that are treated as refinances. And of course, 1031 exchanges. And there's probably a lot more too, but don't want to go too deep into it. Yes.
On that interest only loan that you mentioned, so 10-year IO 30, it rolls automatically to a 30-year fixed with a preset interest rate. So the borrower knows the rate. If you take that 40-year program, and earlier Janice talked about buying down the rate, and we'll give you the money to buy the rate down. So instead of the rate being 4, it's 3.5 or 3.25. If you do that and put that on an interest only for 10 years, it will provide the lowest payment in the non-QM space.
Yes.
If you want the lowest payment in the space of non-QM lending, call Janice Chernitsky. It's the lowest payment out there. I hope I made that clear.
Yes. Well, and to kind of piggyback off of the interest only loan, I don't see our DSCR loan listed here. That's debt service coverage ratio loan. When we're qualifying for debt service coverage, it's really, can the house afford itself? And the ratio can actually be calculated using the interest only payment if you have the IO added to the loan. So
you're talking about your investors, Janice?
Yes, just investor. So that's a great one. I love that. I just want to add it in there.
Okay. And
what's next? Janice.
Jim, why don't you talk? Jim or Janice? Who wants to talk about this one?
I mean, why not partner with LendSure, right, Jim?
I'll let Janice speak.
All right. Well, I mean, Bruce and Jim can be also chime in, but we are a common sense based lender. So we do look at loans and we try and figure out, can we make this work? And I think that's really refreshing. When you work with us, you're going to get straightforward answers. Can we not? Just like I mentioned with the rural property, we're going to take a look at things. So we underwrite up front. So it's a pre-underwrite that's quite in depth. So when you get a pre-approval, it's not just a sure we can do this and then find out later that your income doesn't work or something weird came up, right? That's very rare. We have a lot of very experienced account executives, and we're really are trained to be more than just an account executive. We're going to help you structure the loan. We're going to take a look. We're going to ask the questions for you. On my end, I'm always kind of the person who's there. I'm your cheerleader in the back saying, okay, like, how are we going to get this loan to Bruce or to your underwriter to see what can be done? How can we make this work? And that happens up front. of course, there's a bunch of other reasons, but I think that that really makes a difference because we set that expectation up front versus later on. And I don't think there's anything worse than getting disappointed at the end of a loan, rather than just letting you know, a quick yes is great, but a quick no can also be helpful. And I think that's one of the most valuable things. Plus, we have awesome programs and great people. So,
Hey, Janice, on common sense, I'm going to put out two examples because people
sure.
often say, you guys do these exceptions. What kind of exceptions? One that comes to mind is title seasoning. We don't have a title seasoning requirement like a lot of people do in Fannie and Freddie. I think they have a 6-month rule. It's a pretty hard rule. So we see a lot of those loans. A bigger one is the dreaded job change. These become a little problematic even for us, but a job change doesn't mean it's a no. It means it's a long story as to where did they work? Is the new line of work the same? What's the pay like versus the old job? How can you document the new pay? That's really going to go to Bruce for his final decision on a job change situation. They're not all yeses, they're not all nos, but it is a common sense exception that we can do if it makes sense.
Okay.
And that's the key. It's got to make sense, and then we just need to understand the story. We understand people's lives change, circumstances change, life events happen. So if we can understand the story, we'll build it on our team internally. I've got a team of credit analysts, basically they're underwriters, team of processors that do this, and they work your prequels. So I'm not talking that's the final script for underwriting, but so when that prequel goes out, as Jim said, it's pretty much golden that the loan's going to happen this way, unless something, is drastically changes in the scenario or properties change, or again, another life event may happen. But we're here to help you guys get these prequels in, get answers out to you and your customers, so the borrowers feel. One is I want them to feel safe that they can do this loan and they can go buy their house or refinance and get their cash, whatever they're trying to make their. We want to meet their financial needs, so it's we're Janice's out there building
Okay.
that relationship with you guys.
Thanks, Bruce. And now I'm getting a lot of questions about very specific loan scenarios. I've got a property located here. I've got this LTV, and this is my. I don't want to give you guys the wrong information. So what I'm going to ask for you to do is, you're going to get a thank you email about an hour afterwards. Go ahead and send me those questions, and I will route them directly to your LendSure account executive so that you get the most complete and accurate information possible on those.
Good.
Okay. Now, I've been getting lots and lots of comments on this, questions around this. Can we get flyers with my info on it? Can we get, yes, this URL right here. And yes, I am going to I'm going to send everybody a copy of these slides so you don't have to worry about writing it down right now. But this URL has our private label resource kit, and it's got bridge loan flyers and emails and such, along with other loan program private label marketing materials that are very easy to customize, and you can add your logo on them, add your disclaimer, and go ahead and start marketing to your realtors and start growing your business today. Now, Janice doesn't know this, but I have a very, very special offer for you guys today, the ones who attended live on this webinar. The first 10 people to contact Janice and request a video, I will create a custom private label bridge loan video for you guys. I can only do this because it takes so long to do for the first 10, but the first 10 who contact Janice requesting this video, I will send it to them. So Janice, just let me know and keep
I
track.
can't wait to hear from you. And that is a great offer. Rose's videos are really cool, and you'll be able to get a lot of attention from realtors.
All right, great.
Good. Thanks, Rose.
Okay. And who wants to speak to this one?
Janice.
You do. No, Rose, you know much more about quick call to greater sales in 30 days.
Actually, all right. So basically, our account executives like Janice and our regional managers like Jim, they are here to help you grow your business. So we're not going to stop with just, here's all this information. We're going to dump this on your thing and just good luck. I'm going to ask everybody to kind of give you a call, follow up with you, make sure that you have the resources that you need, make sure all your questions are answered. And, our account executives, they're really good. They will help you develop your business. If you need them to do a little training seminar for your LOs at your branch, if you need them to kind of come along in a couple of realtor presentations, they're happy to do that. And don't forget about those private label resources that we have. I even have private label PowerPoint presentations that you can use. You can put your contact info on them, and you could start presenting them to consumers, to potential homeowners, to realtors, so that you can. That's our approach. Is we're there to like partner with you and help you grow sales instead of just taking in calls and waiting. So expect a follow up from one of our talented account executives within the week. And with that, we have lots and lots and lots of questions. So I'm going to get through as many of them as possible. So let's see. Omer says, what if the borrower wants a bridge loan to be able to make an all cash offer so no permanent loan is required? Will you be able to do that?
That
Nope.
would be no way.
But I have a suggestion. How about a small loan like the first scenario I showed? It was our minimum loan amount was of 150, and it's almost like an all cash offer.
Okay. And yes, you guys are going to be getting a recording of this. Yes, you're going to be getting a the slides on this. Just look for the email from me in about an hour after the webinar. What's the max LTV on the DSCR?
We do go up to 80. Mm-hmm.
Who should be contacted with questions? Go ahead and reply to the thank you email that you're going to be getting in about an hour. That's going to go right to me, to my direct one. And what's Janice's info, contact info? Janice, do you want to give out your email?
Yes, please forgive my very long last name. My email is J, as for Janice, and then my last name's Chernitsky, C as in Charlie, HERNITZKY, Chernitsky, at LendSure.com. I'm actually already getting some emails from some of you. I don't know where you found my email, but good job. I saw about 3 come in right now. Give me my video.
On the support piece that Rose spoke about, I also want to add, if brokers are on the call or some office managers and you want to do something at your next sales meeting or your next sales event with your loan officers, Janice and I would be glad to do a shorter version of this webinar with you at any of your upcoming meetings.
Janice, I've got all these people commenting, Janice, call me, Janice, call me, Janice, call me. You got to email Janice. The video isn't going to work here. You have to actually go.
Yes.
Nice try though, guys. That is some hustle. Thank you.
I like it. I definitely, there's only so much Janice to go around right now, right? So if you do email me, I'll prioritize to getting back to you. And I do want to say for all my coworkers, if you do have an account executive that you work with, please do contact them with questions. They are able to answer those as well. If you don't currently work with someone, then by all means, let me know, and I'll definitely help you out.
Okay, we've got several questions about stacking. What does stacking mean? What fees can we put on stacking? How does that work so can we go over that in a little bit more detail?
Sure. Do you want me to? Okay.
Whoever wants to take it.
All right. Well, Jim or Bruce, feel free to jump in. I'm going to give a very simple example. Let's just say that our loan amount is $500,000 and you are charging 2 borrower paid points, okay, 2 BPC. Those 2 points will be added to the loan amount. So 1 point would be 5,000, 2 points is another 5, right? So you're 10,000. So your total loan amount will be 510,000. Now this works. So if you're at 75 LTV or 80 LTV, or basically unless we're at 90, which is capped, or with the bridge loan, if you're doing just the departing home at 75, we can't stack. But any other one, we could. We can take your 80 LTV loan that's priced at the 80 LTV bucket and take it all the way up to 82. Okay, and we will finance the points. Those 2 points go into the loan amount. That way the borrower does not have to bring those points out of pocket versus we will finance it. This works also with buy down points. So bear with me, but just believe me when I say at 80 LTV, you can finance up to 2.5 points. The lower the loan to value, the more room you have to finance more points. At 80, you have 2.5. So if you were charging, let's say 2, you would have half a point left over to buy the rate down if the borrower wanted to, and it's a 2-to-1 ratio. That means it would reduce the rate by 0.25%. I hope that makes sense, but I'm very
Janice,
happy to paint a picture. Go ahead, Jim. I know you have something to say.
I want to ask you a question.
Oh.
Did you just say that this $10,000 to pay the broker comp can be given to the borrower through the loan, and the borrower's rate's not going up?
I sure did say that.
Did you say the borrower doesn't have to pay the 10,000, therefore he can leave his wallet or her wallet at home?
That's right. I did.
Well, that's a pretty good program, Janice.
I know. Isn't it great? And it's available across the board on all our programs. And
one more thing, if they use that same 10,000 to buy the rate down, they're getting a lower rate. They're not bringing the 10,000 to the table, and their payments are less.
yes,
I get all three of those.
yes, you do. Just for working with LendSure.
Sound like a good program, Janice.
It is.
All right, and Evie, Evie just wants to clarify. So the bridge loan pays off the vacating property, the loan on the vacating property. It refinances the loan, and the extra cash is going to go to the purchase. Correct?
Correct. That is correct.
Awesome. And then what happens if the loan does not sell within 12 months or falls through?
Yeah, that's
I'll
that.
let
That's.
you know that one.
Go ahead, Jim.
The realtor at the 3-month point or the 6-month point should be getting a call from the owner of the property saying a lot of things about getting this property to move, right? At the end of a year, the loan would be technically in default. Interest rate is accelerated to a higher rate. So all of that weight is on the realtor you chose to list your property. Like we said in the beginning, a house property listed is half sold. This is not the time to play the game where you're trying to beat the market and have the highest sale in the history of mankind.
Okay. And then Luz is like, I'm interested in this program. I need to present to my manager and co-agents. You know what? Contact Jim or Janice or your LendSure account executive. They will be happy to help. I know that they've done this before. Realtors get really excited about this. I know my sister is actually a realtor, my sister Sheila. And I told her about this. She's like, wait, what? And I'm like, yep. She's like, how do I not know about this? I'm like, I don't know. Do you offer LPC on any of your programs or just this program?
Janice.
Okay, sure.
Lender paid comp.
Lender paid comp works exactly the same as the finance points when it's borrower paid comp. So it's no YSP. We don't add to the rate to pay you. But if your company signs up with a LPC program, so it just fills out a form and says our LPC agreement is 1.5 points or whatever it is, then yes, we do have LPC. It works the same. So it's the same exact, the whole concept of financing those points is, and it's just a little bit different the way it's disclosed. I always like BPC better because the way it works, there is more room to finance points when it's BPC than it is LPC. But you know, case by case, whatever works for you best is what we'll go for.
All right, and out of respect for the time for our speakers, because I know we're way over what I promised them, I'm going to do one more question, and then any other questions that we didn't get to you, my apologies, but go ahead and respond to that email that I'm going to send you in about an hour, and I will make sure that your questions are answered, and I will connect you with your LendSure account executive. Last question from Peter. How does it work with 1031 exchange?
Bruce?
What part? From
I
a
don't know.
1031 exchange. So typically that's you're selling your investment property, and those proceeds need to be reinvested into a like property. And the IRS has certain specific time frames in order to reinvest that property, or it becomes I'm not a tax advisor by any means, so you'll need to refer all these questions back to your attorney or a tax advisor. That's my simple disclosure on that. But the proceeds when you sell your investment property need to be reinvested into a like property in order to shield that capital gain piece. So we look at 1031 exchanges, whether it's within the bridge loan piece, whether it's not in the bridge loan piece, right? If we're just doing a standard loan to buy an investment property, we'll do those also. Yes, Jim.
Mention the LTVs on the non-owners.
As
Well, they'd be less. You'd be less LTV.
correct. You'd be at a little less LTV on the non-owners, a little more risk on that standpoint. Janice mentioned the reverse 1031 exchange, a unique property in a hot real estate market. These borrowers happened to find an investment property. They had an investment property they knew they wanted to sell. In the meantime, they found one that they just had to have and buy. So they bought it ahead of time, and that money for that 1031 was just parked in another, basically an escrow account until they were to sell their property. A little bit more work needs to go into that, a little more legalities onto it, but we can do those also. It's a little unusual, but than your standard 1031 exchange. But I'm not sure, Peter. I hope I'm answering your question on that. From a 1031s, we do accommodate the 1031s. We're just looking to see, okay, where's the cash to close coming from? And usually it's from the 1031 exchange on some of the investment properties.
Okay, great. Thank you. With that, I would just want to remind everybody that video that I mentioned earlier, a one that's not branded is in the private label resource kit. If you know how to do video editing, or if you have a teenager that knows how to do it, feel free to grab it and go ahead and put your logo on the end. Otherwise, you can take a look at it, what it looks like, and then let Janice know, and I will be happy to do that for you for the first 10 people. With
I
that,
will send those over, Rose.
all right. With that, I just want to say thank you so much, everyone, for joining us today and submitting all your fantastic questions, and we look forward to working with you. Thanks, everybody.
Thanks for
Thank
your
you,
time,
everyone.
guys.
Yeah, thank you.
One sec, everybody. Sorry, trying to close out the thing. There you go.